In a world where the value of digital assets are on the rise, it's really important that we understand what they are, how they work, and how you guys can invest in them wisely. Digital assets from cryptocurrencies to NFTs are reshaping the financial landscape. But it's really important more than ever to understand how we can actually invest in them wisely. To help me delve into the world of digital assets today, I'm joined with Anthony Fernandez, Head of Business Development and Sales at ICONOMI. Hi Anthony, how are you?
Hey Ola, thank you very much for having me on the show today.
You're welcome. How are you doing?
I'm doing well, a bit cold, but okay, how are you?
Yeah, I'm good. Cold as well, but hopefully we warm up as the podcast evolves and we have this great conversation on the topic of digital assets. But before we delve into all things cryptocurrency, digital assets, please introduce yourself to everyone listening.
Yeah, sure. So my name's Anthony. I guess, like you mentioned, I'm the Head of Business Development at ICONOMI. I've worked in the financial markets now for about 10 years. 6 of those years has been directly in the cryptocurrency market. Yeah. So I've been through a number of bull markets, a number of bear markets. I've lost some money, I've made some money, and hopefully here to share some wisdom with yourself today.
Yeah, and I'm very excited because like I mentioned before you started recording, I think cryptocurrency especially has become such a buzzword and people either want to get in it or they're too scared to either invest or even touch cryptocurrency. So I'm very excited to delve into all of your expertise today. But before we touch on that, what is ICONOMI?
So, when you think of ICONOMI, we're really a digital asset portfolio management platform. So instead of you having to go out and build your own portfolio, if you don't have the skill set or knowledge to go and pick individual cryptocurrencies yourself, you can use a company like ICONOMI where we have a range of digital asset portfolios for you to actually choose from, which are actively managed or they're passive. So think of like the S&P 500 or the NASDAQ or these different indices that you can invest into, Vanguard funds and so on and so forth. We have some digital asset versions of those here in the UK with ICONOMI. So there's a number of things that ICONOMI does. Number one, we can give you access to a range of portfolios that are diversified across the cryptocurrency market. Or number two, we can give you a portfolio management solution where you can build your own portfolio to suit your own goals and needs.
Oh, wow. Okay. So I actually didn't know that about the managed portfolio. That's really handy. And I guess for those maybe looking to start investing in cryptocurrency, having like a managed portfolio is probably the best way to go down, right?
Yeah, there's definitely pros and cons. You are putting your trust in a portfolio manager, number one, so that can be a con. But ultimately, if your main concern is the fact that you don't know how to pick digital assets correctly, because there are obviously a lot of good cryptos out there, but there's a lot of bad ones as well. And there is a lot of risk out there with the market. So if you do want some guidance in terms of how to actually invest, then these portfolios could be a starting point for you to use. Yeah.
No, amazing. Well, thank you very much for that brief overview of ICONOMI. And obviously I know we're going to delve into the platform a lot deeper as well. But I guess to warm you up in the hot seat today, especially because this is a fun setup with the podcast, I have 2 quick fire questions to kind of warm you up. So one question I have is, what has been your greatest financial achievement?
So I guess a major milestone for myself is buying my first house last year. So I was talking before the podcast just then. So that's a huge milestone for anyone. And I think coming out of university, doing a master's degree, having no money, traveling different parts of the world. I lived in Australia for about 6 years, moved back to the UK and purchased my first home last year. I've got 2 little boys, so having our own family home is definitely probably a financial achievement that I'm proud of. Yeah.
And I feel like loads of people that come on the podcast also say the same thing, and I understand why, because I'm in the process of saving. Yeah, I think not too far off, but I'm still a way off. So I think a lot of people can resonate when they finally get that property. They're like, finally.
It's huge, and if you're thinking about it at such a younger age as well than what I probably was myself, then you're definitely ahead of a lot of people as well. So that's hats off to you. Yeah,
no, I love that. Well, congratulations.
Thank you.
And my second question is, what's one piece of financial advice you would share with your younger self?
I would definitely say consistently saving £100 or £200 every single month will really make a difference. When you think about saving £100 a month, it seems like such a small amount of money. But when you zoom out and look at a longer term like time frame, 5 years or 10 years, saving £100 a month, that's £1,200 a year.
Yeah.
Over 5 years, that really compounds, especially over 10 years as well. And if you add on top of that investing in an asset class that is high growth, like tech stocks or cryptocurrencies, that could potentially be a deposit for a house or life-changing money. So consistently saving a small amount of money every single month would have been, that's something I wish I went back and did differently when I was younger.
I love that, because I feel like people don't often appreciate how little saving consistently can actually get you and how far it can get you in life.
What is £100 a month? That's 2 dinners eaten out. Like that's
Yes.
2 meals a month. It's really not that much money. And thinking about that over 10 years, you know, if coming out of university, maybe like early 20s, 22, 23, by the time you're 30, 32, that is a deposit for a house, or potentially a much larger sum of money.
Yeah, so true. So thank you very much for that word of wisdom. Guys, I hope you're listening to that. And obviously, Anthony, today we're talking about digital assets, cryptocurrency. So for those listening to the podcast that are probably like, what the heck are you on about? What are digital assets / cryptocurrency?
So, you know, digital assets is quite a broad question. You know, you have cryptocurrencies, you have NFTs, like you mentioned. We now have real world sort of assets, like tokenized assets. So you could be looking at tokenized bonds, tokenized money market funds, tokenized art, for example, as well. So these are essentially assets that are stored on the blockchain. Now, every single asset, let's think about cryptocurrencies at the moment. You know, each asset in there, none of them are the same. So no cryptocurrency is the same.
Yeah.
You know, when I'm speaking to investors, some of them, or one of the main concerns they say to me is, well, you know, can't someone come out and build another cryptocurrency to rival Bitcoin, for example? Yeah. And there's potentially an unlimited amount of cryptocurrencies that can be built. And that is a valid point, but no two cryptocurrencies are the same. They all have a different real world use case. So when you think about Bitcoin, it's completely different from Ethereum. So Bitcoin is a store of value. And the reason it's a store of value is because it's a hedge against fiat currency devaluation. So fiat currency being the pound, the euro, the US dollar.
Yes.
When central banks print endless amounts of money, which causes inflation, you know, they increase the M2 money supply, it devalues your money in the bank. Bitcoin actually acts as a hedge against that. So when they devalue the local currency, Bitcoin tends to increase in value. So that's why Bitcoin is considered a digital gold. It's a store of value, okay? Now, Ethereum is completely different to that. So Ethereum is essentially a smart contracts platform. It's more like a tech stock. Think of the NASDAQ, okay? So Ethereum is a layer 1 blockchain, and layer 2s are projects that can build upon the Ethereum blockchain. So, you know, you have Bitcoin, which is a store of value. You've got Ethereum, which is more like a tech stock. You then have Ripple, which is XRP. Yes. That's a global payments system. So they're doing a lot of work in the SWIFT ecosystem for global payments with central banks. So every single cryptocurrency has a slightly different use case. So hopefully that answers a bit of your question there. Happy to dive into any of that in a bit more detail as well.
Yeah, so you actually answered my next question actually very, very well, because I feel like I mentioned, loads of people, when they think of digital assets, they instantly think of cryptocurrency. You obviously mentioned the different types of coins there. So I guess one question I have for you is, what's the biggest misconception you come across when it comes to investing in cryptocurrency?
So one would be that they are too volatile. You know, you need volatility to make return on investment. Okay, and if you zoom in to the short intraday moves of cryptocurrencies, they can be largely volatile. But when you zoom out over time, you can actually see a lot of them, like Bitcoin, have a cycle. They have a trend. Yes. Bitcoin has this kind of 4-year period where it moves through a weakening, like a bear market, and then a bull market cycle as well. So, you know, it's not necessarily that they're too volatile. It's more that people don't time their investments correctly. So they'll be buying in at the top of a cycle. They will go into a crypto winter. They'll lose money. It will put them off from investing in that asset going forward. And then we'll go into a bull cycle, and they wish they held onto their investments longer. So understanding the cycles of Bitcoin will help you in, you know, allocating money to the market and then reducing your exposure and realizing some profit. So I would say volatility and understanding the cycles is one. The second thing would also be that a lot of people think that cryptocurrencies are for criminals and for, you know, you get a lot of this, you know, illegal activity on chain. But in actual fact, yes, that can happen. But every single transaction is recorded on the blockchain. So if you are doing illegal activity and you're sending money to and from someone with cryptocurrencies, those transactions are recorded forever on the blockchain. They're easily traceable via authorities as well. Yes, there's obviously ways to work around that, but every single transaction is recorded on the blockchain. So actually, it's more optimal to use fiat currency for illegal activity.
Yeah. With that, I've got two questions. One, when you mention the cycle of cryptocurrency and how it works, from people I've spoken to and investing myself, people know it's very hard to time the market. So For those looking to maybe invest in cryptocurrency this year, is it better to invest monthly rather than just like dumping all their money in one bit? Obviously, it's not financial advice, but how do you think is the best way to navigate investing in cryptocurrency?
I would actually go back to my time working at a Bitcoin mining company. So the most successful way to build wealth in crypto is through dollar cost averaging frequently and consistently. So if I go back to what I mentioned before about saving £100 a month,
yes,
in the crypto market, you don't necessarily need to time it. You just need to be consistent over a long period of time. So invest in frequently every single month, no matter what the price, is similar to what a Bitcoin miner does.
Okay.
So a miner, they actually receive rewards every single day or every couple of days, no matter what the price is. So if you're investing frequently, whether it's every week, every 2 weeks, once a month, over a 3 or 4 year period, that soon builds up to a substantial amount of money. And what you've actually done, if Bitcoin goes into a bear market and we get this kind of 70% correction, 80% correction, you're continuing to buy at every single price point on the way down. And then again, when the market starts to lift, you're still buying no matter what the price. So you actually tend to bring your overall average price lower if you continually buy into a falling market, like in a bear market.
Yes.
So being consistent, no matter what the price, whether in a bear market or a bull market, is the most successful strategy.
No, thank you very much for clearing that up, because I feel like that's the strategy I have when it comes to investing in regular assets. So I guess the same kind of applies with digital assets. And I guess secondly, your second top point you mentioned about, you know, people getting skeptical about cryptocurrency because it's seen as like something that criminals invest in, etc., etc. But I think that ties into the fact that it's, cryptocurrency isn't yet a regulated product. What does that mean?
So yeah, you're right. So cryptos aren't regulated yet, but ICONOMI, for example, we're FCA registered. So for us to be able to offer crypto to the UK market, you have to be FCA registered.
Yes.
There's two kind of differences here. You have FCA registered and you have FCA regulated.
Okay.
Now, by 2026, the FCA have said that cryptocurrencies will be fully regulated.
Okay.
So that means it'll become a fully regulated investment vehicle. Now, at the moment, because it's not fully regulated, there's no cover by the FCA if something was to happen to your investments. When it does become fully regulated, there'll be some kind of insurance or cover from the FCA.
Yeah.
You can go to the financial ombudsman if the provider acts like does foul play and loses your assets, for example. Like, you know, a bank account. You know, if something happens to your bank account, the money in your savings, you can obviously go through the financial ombudsman to receive some assets back. So all bank accounts are insured up to an X amount of money in your bank. Crypto is not that yet because it's not fully regulated, but when it does become fully regulated by 2026, that will be an option, which I think will be huge for the market.
Yeah, I can imagine, especially because so many people are already investing in cryptocurrency, let alone when people then have, I guess, the extra bit of security, right?
I'll just touch on that as well. Probably the most exciting thing for me when crypto does become fully regulated is it will give cryptocurrency the opportunity to be held inside ISAs, which are obviously tax-free, which it can't be at the moment. So once crypto becomes fully regulated, there'll be an opportunity to hold that inside certain ISA products as well.
Yeah. Oh my gosh, that's really good to know, because that's something I didn't even think of, especially for those probably investing large amounts of money. They're now like, oh gosh, I don't want to sell it because that means I'm going to have to be liable for capital gains tax. But I guess for those looking to invest in digital assets this year, how can people do it wisely and responsibly?
Depends how much risk you're willing to take. You know, if you're new to the market, you know, I think people get too caught up in trying to find the next hype coin, the next meme coin, you know, which is all fun and games until you lose quite a lot of money. I mean, if you've seen recently, of the past month, we've had the Trump coin come out, and it's obviously now gone into the ground. The Molina coin as well. There was one recently from Argentina. So I would actually say focus on the top 10. So look at Bitcoin, Ethereum, XRP, Solana, and build a portfolio in the top 10 and consistently, you know, dollar cost average into those particular assets. You know, follow the liquidity as well. At the moment, a lot of institutional money is flowing into Bitcoin because of the Bitcoin ETFs that went live last year.
Yes.
Over the past year, there's been 40 billion that's flowed into the Bitcoin ETFs in the US. Just recently, a Middle Eastern sovereign wealth fund invested $500 million in the Bitcoin ETFs just before Christmas. So if you invest alongside what these institutional players are doing, you should be more successful.
Yeah.
Ethereum, for example, they've now got the Ethereum spot ETFs are now live. They went live last year. So they've had 6 months worth of trading. $5 billion's gone into those ETFs. So if you follow those like liquidity moves, then you should be successful. Solana does well at the institutional level as well. So yeah, don't go too crazy. Focus on the top 10. See if you can find tools like CoinShares. There's data on CoinShares to track liquidity.
Yeah.
See where that money's going, and then try and base your investing upon what the professionals are doing in the market as well.
And I guess another thing I would probably add is these crypto bros in terms of copying these YouTubers and influencers on, I don't know, in these different coins. Like, what would you say to those that probably listen and watch these people online? Like, obviously I am one person that does share financial education online, but what would you say to those that are probably like spouting really bad financial advice?
I would say if you're following YouTube, not all YouTubers are the same, but if you're following particular YouTubers that are shilling one particular asset, it tends to mean they have a vested interest in that particular asset. They're potentially getting a kickback from that cryptocurrency project. And whilst there might be some short-term gain if you get in and out quick enough, ultimately there's going to be a loser holding the losing bag, we call it in the cryptocurrency market. So take what you see with those YouTubers with a pinch of salt, because they tend to have a vested interest in the projects that they're actually shilling to their audience, and ultimately they're going to be selling on their audience. So what will happen is they'll promote a particular cryptocurrency. It tends to do fairly well early on. All of the influencers and the insiders start selling their position, whilst all the audience are still continuing to buy. And then what happens, that obviously the coin starts going into the ground, and there's people holding this losing bag with a cryptocurrency that has no utility. Scary world with people literally just trying to be out for themselves sometimes, isn't it? It is. And that's why, if you're new to the market, definitely thinking about sticking to the top 10 or top 15 assets, not going too crazy until you've got some confidence and you know what you're doing. So don't take too much risk, even though you are investing in the cryptocurrency market. Yeah, no, thank you for that. And I guess another thing I always teach about when it comes to investing is investing for the long term. Would you say the same with cryptocurrency? Because I feel like when I was in Bali, there was loads of people that are like actively trading crypto every single day. Is that necessary to be able to invest in cryptocurrency? Not at all. Not at all. Crypto short-term, day-to-day, Bitcoin, for example, could move a couple of £1,000 every single day. And if you're so there's a difference between leverage trading and spot buying, spot investing. If you're leverage trading, you're essentially betting on the direction of that cryptocurrency moving every single day. So you can bet on it going up, you can bet on it going down. Yeah. That's definitely for the professionals. As a new investor in the market, just buying the spot asset where you own the underlying asset is definitely more relaxing than day trading. Day trading comes with a lot of stress, and you can obviously lose a hell of a lot of money very, very quickly. With spot investing, you simply buy, you hold, and you accumulate. Okay, it's totally different to day trading. There's no emotions involved. You're going to buy frequently every single month or day or week over a long period of time. Now, one thing, if you look at Bitcoin, I encourage everyone to go and have a look at a chart called the Bitcoin spiral chart. Okay. And basically, this shows how since Bitcoin's inception, it has a spiral, and one lap around the spiral is roughly 4 years. Okay. And over a 4-year period, from 4 years to 4 years in the future, there has never been one point in time where Bitcoin hasn't been higher than 4 years before. So what that means is if you're buying Bitcoin today, theoretically speaking, it should be a lot higher in 4 years from now. Yes. Okay. We don't know what the price will be, but in 4 years, it should be significantly higher. Wow. Okay. I'm definitely going to firstly check that chart, because I definitely need to invest, I think, a little bit more regularly than I do into Bitcoin. But I think, again, like you mentioned, there's a huge difference between trading and investing. Like when I talk about investing to my audience, I'm always very clear, like, I'm such a boring investor. I literally pick one stock, one ETF, and just invest regularly every single month. And I guess that's probably the same thing people should try and do as well, shouldn't they? I'm on the same page. I've been on both sides of the coin. I've been a day trader before for a period of time, but now I'm definitely more of a buy and hold long term and accumulate. Yes. Definitely less stress. I would say less risk, and there's a lifestyle, there's an image that people portray online about being a day trader that is, glamorous. But I would actually argue it's very not. It's not like that for most people. So. Yeah, it's not something I could probably do myself. But I guess obviously you mentioned the top 10 assets that people should maybe look into if they wanted to go down the route of investing in cryptocurrency this year. So where can people go to research which digital assets are worth investing in? There's so many different tools you can look for, different newsletters. Most major exchanges have newsletters. You can go to CoinMarketCap. You can go to CoinShares, is one of my favorite ones to go to. They offer weekly research into the institutional money that's flowing into different assets.
Yes.
So that's like a professional place to go and actually view what liquidity is going in and out of the market. You can use DeFi Llama, which is a really helpful tool, and this basically tracks the TVL, it's called. So TVL is called the total value locked.
Yes.
And when you think of Ethereum is a proof of stake token. It's different to Bitcoin. Bitcoin is a proof of work. Proof of work is where you have machines and miners working to solve transactions.
Okay.
That's POW. Ethereum is POS, which is proof of stake, and it's where investors pull their Ethereum together to form nodes, and those nodes work essentially as a miner. Okay, so they're staking their Ethereum on the blockchain to receive rewards.
Yes.
Now, coming back to total value locked, when you're tracking the total value locked, this is essentially the total value of assets that are locked on the blockchain.
Yeah.
And when you track the TVL, this indicates more confidence in the project, because when people are locking up their assets and locking up the TVL, it indicates that there's more confidence, and it takes circulating supply of that asset out of circulation.
Okay.
So it puts upside pressure on the token. So if you look at Solana, over the past 2 years, it's done 1,900% ROI. And that's because so many people were locking up TVL on the blockchain.
Wow.
And if you track the TVL and you watch the TVL grow, you know that more people are locking their assets on the blockchain, and you know that's putting upside pressure on that particular asset.
Wow, interesting. Okay, so I'm definitely going to have to do a lot more research after this episode, because I feel like I've learned a lot. I guess, Anthony, before we kind of wrap up today's episode, if you had to give maybe 3 final tips to those maybe on the fence when it comes to investing in digital assets, what tips would you share with them?
I would actually say, you don't need a lot of money to get started. Even putting £50, £100 a month away into Bitcoin on its own, for example, will, over a year, watch and learn how that grows. Number 2, I'd actually say try and find some good people to follow on like LinkedIn, and find some newsletters to review as well. Don't worry too much about these, people that are shilling the next meme coin that's going to do 100x. Stop looking for the 100x tokens, because Bitcoin, for example, it has an annualized return of 150%. That's life-changing on its own. If you invest over a 5-year, 10-year period, that is life-changing. You don't need these 100x tokens. So I'd actually say, tips would be focus on a smaller number of assets, the big ones. Stop following these kind of people that are shilling these 100x tokens, and consistently, buy into a particular asset as well.
Yeah, no, thank you. Those tips were perfectly said, so thank you very much. And I guess finally, for those looking to invest in cryptocurrency, why would you recommend ICONOMI, and how can people invest using ICONOMI?
Sure. So it's really an automated way for you to invest into a variety of different portfolios. So you may have different goals and aspirations of someone else. So we have hundreds of portfolios available for investors to actually choose from.
Yeah.
Because, one of our most popular ones is like a blockchain index.
Okay.
So think of the S&P 500. It's an index of the top 30 assets in the market. All of your money and your assets stay in your account at all times, so you don't send it to a fund manager like in traditional finance.
Yes.
Which means you can actually withdraw and remove your money from the portfolio within minutes if you wanted to. When you think of a traditional fund, there could be like a 3 or 4 or 5 day sell down period to get money back. With this, there's instant access to liquidity. So there's portfolios for you to use, and if you're more confident, you can actually build your own portfolio, build your own index. You could build the OLA index, for example, the top 10 assets in the cryptocurrency market, and automatically invest into that particular asset or portfolio over a period of months.
Amazing, Anthony. Thank you so much for being a guest on the podcast. Like I mentioned, guys, please invest responsibly when it comes to investing in digital assets. I think you shared amazing tips in how people can do that anyway. So yeah, please, guys, I hope you made beautiful notes, especially based on what Anthony shared with us on the podcast today. But Anthony, before I let you go, if people would like to start investing with ICONOMI, how can they go about doing so? Yeah,
you can go to iconomy.com. Feel free to follow us on LinkedIn. I run a free monthly newsletter on LinkedIn, just for education and research as well. So you can reach out to us on LinkedIn, or you can go straight to iconomy.com. There's a free account to set up, have a play around. We have a full support team, or you can reach out to us on our support email as well.
Thank you so much, Anthony. And guys, as always, there'll be links in the podcast description.
Thank you so much for having me as well.